Hey everyone, welcome back to another live stream. In this video, we're actually going to talk about the suits versus retail. So even if you're watching this later, I think it's a good video to be aware of. I'm going to start by I want you to understand that there are institutional products that exist out there, which you might not be familiar with unless you're an institution. And these institutions literally take our data and they make trades based off what we are doing. It is really incredible how much retail gets tracked to take counter trades, to follow retail, to front run retail. It's insane. I mean, people spend tens of thousands to hundreds of thousands of dollars just to track retail. And what's really interesting is I got this note that I wanted to talk about, and that is that, listen to this. I'll just read this off for you. Retail investors' aggregate participation gives lifts to equity markets as institutional demand remains subdued. Now, what's interesting about that line right there is most retail does not believe that. Most retail thinks it's just the institutions that are running the show. But you'd be surprised. Retail has a substantial amount of buying power. And it's not just a matter of buying power, it's that you got to match the order book, right? So when retail goes in and buys Tesla or AMC or GME, there aren't necessarily that many sellers at these like low prices that we've seen. Like how many people are really selling Tesla in the 700s? How many people are really selling, GME at like 90 or AMC at like 12, right? So when retail flips the script and starts buying, the order book moves up really, really fast. And so it's interesting to me that I've seen other YouTube channels talk about how, oh, it's only institutions manipulating the market. Retail has a lot of freaking power. In fact, one of the patterns that has been true the last couple months regarding retail is it seems that in the morning, we get buys. We get a lot of activity buying the dip in the morning. Midday, things chill. Like we get a lot of activity in the morning. Sometimes we get that early morning kind of institutional selling. We get some retail buying. We get a lot of volatility first thing in the morning. Then we get kind of flatness throughout the rest of the day. And then we tend to often see this sort of run towards the end of the day. And so it's kind of weird that we see this on the indices. But guess what's also true? And the facts tell us this. Retail is most active at market open and market close. Whereas, and that's probably because, quite frankly, us as retail, like a lot of us have jobs, right? So it's kind of like, we can hop on and do some trades, get our trades in first thing in the morning, and then do some trades maybe at close. But the rest of the day, a lot of us, we work, we got jobs, got things to do. Whereas institutions, they're sitting in their office trading or researching or studying or whatever they're doing all day long. So it's kind of an interesting thing to consider, right? Is that retail has this sort of morning and afternoon priority for trading. And then this was an interesting one as well. Listen to this. Okay, and it's kind of worth mentioning that we had a little bit of a dippity dip. Actually, you know what? I could throw this picture up. Yeah, you know what? Let me show you this picture because this is a really cool one. And this will show you something that's been happening with retail sentiment. So retail has been buying almost all year long, but has really gotten screwed doing all this buying since January. I mean, if you think about it, retail's just been getting smoked. All the buying, the dip has been bad up until really February 24th and like March 14th, right? That's when we started actually having an inflection point where it's like, okay, now we're actually moving. But take a look at this. Look at this chart right here. This is retail buying right here. So these lines right here, these like purple bars right here, this is all of the retail inflows. And then the line right here, this is the S&P 500. And so if you take a look at it, you can see retail has been pretty consistent at buying. We got our dippity dip over here in January. And if anything, this like meaty, thick part of the line has moved up. And retail's like, let's spend more money. But something that's been really interesting about the amount of money retail has is it kind of looks like retail really kind of shot their load right here. Because you see how the purple lines, you've got much more density and height over here at the purple lines, with that you don't actually have as much of over here. You're actually probably, if I were to draw an average over here, December, January, probably be here. Average now, February, March is more like here. So even though retail is powerful in moving markets right now, retail doesn't have the money retail used to have. which is kind of interesting to see. And this is exactly why I thought it was really important to take a break from shopping here in Jan and Feb. Wait for the fear catalysts to come and go, and now we can go shopping, which is great. And you are actually starting to see that retail buying come back. So I think that's pretty neat, seeing that retail buying coming back over the last couple of weeks, reiterating why we're seeing this sort of move. But in addition to that, we've got okay, so here's a report here that retail, the first 2 weeks of March almost capitulated. Like there's this belief that right before the Fed meeting, retail's like, that's it, we're done. We've bought the dip so long, we can't buy the dip anymore. We're done. We're out of money. And you saw this capitulation, and what I thought was neat about it is I felt the same thing happening, to the point where I sent the following tweet. I'll show you. If you don't follow me on Twitter yet, you should follow me there. While I scroll to this, I do just want to give a quick shout out to the people who are taking advantage of that coupons in 2 days and getting lifetime access to those amazing programs on building your wealth. Adam, Stocks and Psychology of Money. Federico, Stocks and Psychology of Money. Rodolph and Psych. Jennifer, Stocks and Psych. Jennifer also grabbed real estate investing. Jeff, Stocks and Psych. Solomon, Stocks and Psych. Welcome aboard. And Alejandro, welcome aboard. Okay, so what I want to show you here is on the 14th of March. Take a look at this. Right here, 14th of March. I wrote, this is peak fear in the stock market. Triple bounce on QQQ. This is the key right here. Low buying pressure pre-Fed meeting, right? We're on the bottom of the QQQ here, 0% Fibonacci, third bounce over here, right? This low buying pressure is literally what ended up happening. I mean, the 14th is probably honestly right. Stupid wrong pen. There. See how tiny that little purple line is? You can't even see it down there because it's so tiny. And so, in my opinion, those are the juicy times to buy, because that's literally the definition of, and people always say it, but very few people actually do it. You know how people are like, oh, be fearful when people are greedy, be greedy when people are fearful? When you have low retail buying, right, like you do right here, that's fear, right? That's scary. That's fear. These your lower bars over here. And then over here, retail's getting a little bit more excited, right? But I think it's too early to call this greed. I would say greed really starts coming in when we start breaking new highs and some of the fib highs. Like, for example, if I go out to the day chart on QQQ, I mean, come on, we're not even at 50% retracement yet. Like, you can't really call this greed. And it's always possible we could rotate back down to 23.6, right? So you want to have a margin of safety in stocks. Like where you don't really have much of a margin of safety right now, oh, not a surprise, back under 1,000, is Tesla. You know, a lot of folks, after Tesla runs, they'll ask me like, Kevin, should we buy Tesla? Should we buy Tesla? And we were doing the course member live stream, and I think it was like at 10:40 this morning. And I said a number above which right now I'm not buying Tesla. It's way lower than where we are now. And the reason for that is I want safety. I want that Warren Buffett margin of safety. It's so easy to forget that when you buy here at, say, 1040 or whatever, it's much easier to fall to 900 and lose a lot of money. Whereas if you're at 1,000 right now, it's a lot harder if you have an average of, let's say, 750 just in the last few weeks, an average, which I do just from, again, the last 3 to 4 weeks of Tesla buying average. That gives me a lot more of a margin of safety. So that makes me comfortable, but also just keep, and Tesla's about to turn red, but do keep an eye on these retail flows. And remember that as, oh, look at that. You got a little bit of a breakdown right here on the QQQ. As prices go up, less margin of safety. So watch that. Retail flows, remember, beginning of the day, end of the day, you get the biggest flows. And listen to this. Institutions here saying, we suspect the post-FOMC rebound was largely driven by strong retail buying for equities. It is quite unusual to see strong retail buying during a rally of this magnitude, as retail are often contrarian investors. That's good. The increase in purchases suggests that institutional investors on the other side of the trade are hesitant to chase the rally, or were hesitant to chase the rally at first. So you see a really big difference here between institutions and retail right now. Quite interesting, I think. So we'll see what happens. And this particular research piece over here goes on to say that retail investors can have a larger than usual positive effect on stock prices. So kind of throwing water on this idea that retail can't move stocks. Retail moves stocks. And so we've seen that on flows here. And again, retail also tends to be least active during the middle of the day. So it's very, very common to see this middle of the day like panic almost. Kind of interesting. So I thought that was something neat to watch. Now, obviously, we've got a lot of excitement happening over here. GME, AMC, a little bit of a chillaxing right now, probably because you're seeing, oh yeah, look at a firm kind of tanked on the intraday here as well. You had that. Look at this terrible triple top you had. Not so good right here. So look at that. That's. I mean, you almost got a quad top right here, right? So bad sign intraday. I actually like a firm a lot. And especially because of what's happening with consumer trends right now. Buy now, pay later's up, consumer trends are up, everything kind of pointing in the direction of people potentially borrowing buy now, pay later or using buy now, pay later more. But what else? A lot of, big movement intraday today. This is another one of the reasons I actually personally like doing live streams more once the day has evolved rather than right at the beginning, because at the beginning of the day you get this and it's kind of like, oh my gosh, you're just going straight to the moon. Not necessarily. Not necessarily. Anyway, so we could do a few questions, I suppose, if anybody has a few questions. And let me take a peek at it. Yeah, I think some charts could show greed. I see the question here. Look at this chart and tell me everyone isn't being greedy. Really, if you look at SPY or QQQ and you go to the day chart, you're at 38% retracement. So, oh, that's the 1 hour. Sorry, one sec. Again, go to the day chart over here. This is not, I mean, maybe there's some greed over here and some FOMO, but I don't see substantial euphoria by any means, right? Yeah, Tyson's one I'm researching. That's a really good question. It's not one I've put any money into, but definitely one I'm watching. Yeah, I actually don't believe in the short squeeze theses. I believe that retail buying absorbs the order book, and so you see quick moves up. Searches for air travel are at the highest level they've been since 2019. Problem you have with airlines is a low capacity to actually bring margin to pay down debt. They got a substantial amount of debt, so it's a little bit of an issue. Yeah, I'll put my face back down. You're right. Yeah, we were doing a special thing this morning in the course member live, so I had to put my face up there. There, we'll go back to there. There we go. Okay, cool. Do you think since trends are showing people spending more money on BTC will turn up? Maybe Cardano's been killing it. That's the only one I've got. Thanks for not being a jerk to me. Oh no, why would I be a jerk? I don't know. Thoughts on Mullen? I'm curious. I know it's a momentum trade. Let's see how's it doing today. That's the second day in a row of red, right? Although not much yesterday. It did end up recovering towards the end of the day yesterday. Was Adobe the company you mentioned in the video this morning? Adobe is actually not a company that I threw money into. I was disappointed with the earnings call. I was not happy with the earnings call. We talked about that a bit in the stream this morning. Ada's been doing great. Firm going to the moon. Well, not right now. I think it kind of fell, unfortunately. But I do think a firm has a good shot of retracing back to that 80 to 100 sector. But the entire market right now is selling down a little bit. So we've got a drawdown. I think the SPY's down 1% right now. Yeah, it is. SPY down 1%. Yeah, so you've got a sudden kind of institutional sell-off happening here. That's at least my guess, is that this is going to be heavy institutional selling. $8 to $10. I don't know about that. Hey, the courses are like 41% off or 42% off, something like that. Like it's pretty much 50% off. Like just put the coupon code in, you'll see it. Blockbuster. MasterCard, Visa. I'm always interested in these guys. I think Visa's really compressed in valuation. They've got beautiful margins, really, really great margins. But honestly, I prefer a firm. You know, I know it's been a dog stock, like it's gone to crap. I get it, but like fundamentally, everything I'm looking at is saying no, 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 no. Like I want exposure to a firm. So I mean, I was able to lower my cost basis in it about an average of 22, 23 bucks, and harvest losses on it before getting back in. So it was like beautiful from that sense. Like I'm green on it now, although I did buy a little bit this morning that I think I'm red on, probably red on, but that's okay. Overall, it's still green. But yeah, you know, as long as there's no recession, that's the big thing. We go recession direction, a firm's a problem. As long as there's no recession, Americans are going to use this service more and more. Like I prefer a firm over Visa. So excited about that. Yeah, Lemonade's been kicking butt. I mean, it's doubled from like $14, the low. That's another one that I'm really paying attention to. Tesla's going nuts. Yeah, it had, you know, wouldn't be surprised to see that. Oh, well, look at that. It's trying to come back. I mean, these are just the gyrations of the market. If you let your emotions be driven by the minute candlesticks, you will make mistakes. I hate to say this because, you know, people are like, oh, Kevin, you stopped the live streams. Why'd you stop the live streams? I'm going to be fully honest here. One of the reasons I stopped the live streams. Oh, let me go on. Hold on. I want to do this. Heart to heart. One of the reasons I stopped doing the live streams was because I had this thesis that I should sell in January and rebuy by March 16th. That was my thesis. And I believed my thesis so hard. I followed my rules. I wrote it down. I was transparent about it. I said exactly when I'd sell. I said exactly when I'd rebuy. I said I would harvest losses and get back. You know, everything that I said I would do, I did. The problem, though, was it was emotionally draining. It was really, really hard because even though I wrote down my thesis and I'm like, I'm very confident in this thesis, I think it's going to do extremely well. And I was right about that. If I sat and looked at the minute sticks all day long, I guarantee you I would have screwed it up. So I'm like, I'm not going to look at the sticks anymore. I'm going to stop doing the live streams. I can't handle looking at the minute sticks when I'm trying to make, you know, a more macro play, right? And so that's the trade I made. You know, like if I'm day trading, I'm gonna look at the minute candlesticks, right? Maybe the 5-minute candlesticks, right? But if I'm doing a macro trade, come on, man, the minute sticks are freaking noise. I can't look at that crap. So it depends what you're doing. Like, don't get me wrong. There's nothing wrong with the minute candlesticks. You look at minute candlesticks, it's okay. But just you know, use the right chart for the strategy. Will you do an end phase video? Maybe. I don't know. Individual videos on stocks. I really should, but yeah, we'll see. Now, you know, I think this is disingenuous to say you burnt little guys by selling everything. Well, first of all, I don't give advice. Second of all, if anything, you saved money selling if you copied it. You know, depending on what stocks you were in, right? So I can't control the market. So I do think that's a disingenuous statement. I like your courses. Thank you. I like how your name is Screw College too when you're saying that, because honestly, I think you will learn more in these. Like I tell my kids, like, you don't need to go to college, just take the courses. It's true. Any thoughts on leaps versus just buying stock? I prefer just buying the stock. So looking at let me pull my portfolio up really quick. So looking at my portfolio, I have, I think it's like $230,000, $240,000 of YOLO calls. Let me show here. Kevin stocks. All right, we'll give it a sec. Oh, thank you, Jake. Really appreciate it. Like it or hate it, if you had exactly followed Kevin's trades, you shouldn't. You'd be better off. Okay. So my portfolio, I have 268,000 dollars of YOLO calls. All in, well, actually, mostly in Robinhood, because I thought if we're gonna have YOLO calls, we may as well do it in Robinhood. So that's my YOLO portfolio. The rest is, what is it? There's no margin. 3 point. Well, that's as of yesterday's pricing, but I don't know. It's roughly the same right now. 23.6 in stocks and crypto. About 10% cash. But I'll probably blow my cash on taxes anyway. So I'm pretty much all in. Like I don't really have much left to invest and no margin. And so, we're coming out of a bottom too. So it's kind of interesting. But we'll see. Why is Jeremy so pissed at you? I didn't know Jeremy was pissed at you. Why the midday sell down? Yeah, so watch that beginning part of the video. Midday is when retail, in my opinion, is least active. And you get this sort of institutional pressure. It wouldn't surprise me that we get a recovery by the end of the day. It doesn't necessarily mean we're going to go like NASDAQ and spike green, but I wouldn't be surprised if we have the losses. Like if we end up, down maybe 0.4 or 0.5. Could be wrong. Maybe it'll worsen. I don't know. But that's what we have been seeing, at least. Doesn't necessarily mean that that'll continue. Okay, yeah. When you're 18, the biggest thing you could do is make sure you make more money. Focus on the top line. Make as much money as you can there, and then of course real estate and stay away from too much speculation. Yeah, reverse repo market. Let me pull it up. I haven't looked in a few days. Reverse repos. Okay, and then I'll probably go get another cup of coffee. Oh, yeah, you've had a little bit of a pop-off there in the reverse repos. Yeah, so what this is probably a sign of is a liquidation by banks of bonds. So banks selling bonds and then parking the cash in the reverse repo market. I actually don't think it's necessarily a bad thing. Thank you, Jarhead, for telling me not to pay attention to haters. It's a psychological thing. It's one of those things where, like, you look at 10 comments, and they could all be positive. And then there's one negative comment, and that's the one you remember. That's the one that, like, lingers all day long. It's a terrible thing. It's the toxicity, honestly, of real estate. I'm sorry, of YouTube. Okay. Any other last minute questions? Don't worry about them. There you go. Thank you. Zero sum David. Perfect. Kevin I don't think I'm a hater. Why would I be a hater? Kevin, thoughts on SoFi? Yeah. So the video that I made this morning, I think, is really good for you to watch on the small caps and how small caps are kind of getting somewhat left behind. Now, there's this argument to be made that maybe if small caps are getting left behind, that's the perfect time to buy them, but not necessarily if markets in general, retail and institutions, think there's too much risk. Maybe you wait for that inflection point. So SoFi has a few problems though, right? Because SoFi is relying about 20% of their income from the brokerage business and about 50-60% of their business on loans, which would be like student loans, mortgages, right? With rates going up, mortgages and refinances go down because people have already gotten their debt. So that's a problem. And the second problem is the brokerage business is like nobody wants to invest in stocks anymore. It's not like the pandemic where everybody's in on stocks. So, a lot of people have been burned out of the stock market. A lot of people have quit. So, and less people are signing up. So that's my thought on SoFi. Your stocks and psychology course, is it discounted right now? It is. And is it bundled with real estate? It can be bundled with real estate if you want to bundle it with the other real estate course, and then you get an extra bonus discount in there. Volcker is going to happen. Yeah, that would be bad. If we get Volcker, it would be very, very bad. Hey, Kev, I'm a commodity trading advisor. Been a great year for me. Yeah. Commodities. Crazy options trading today in the wheat market with options around $20, which is double the market now. Wow. Oh, man. Woo. It'd be interesting to, Jared, learn more about what you do. Please respond to what? Yeah, I did sell SoFi puts for $15 last, like you said, last year when we weren't expecting these kind of insane hawkish rate hikes, right? So yeah, I, you know, I have a little bit of SoFi left. I think in my public, the metkevin.com/public link, I think I have some SoFi there. But yeah, it's down. You know, that position's down like a lot, like 40%. It sucks. Matterport's getting caught up with the other smalls, right? Unfortunately, it's a bummer. Yeah, DWAC will be interesting. I think it's substantially overvalued, but you know, you've got kind of political buying pressure on the order book there, and then people are hodling and not selling. So, no, I mean, I mentioned the yield curve regularly. I'm not so worried about it, but let me look at it right now. It's probably going down again. I wonder if it's under 20, just because the market's selling down a little bit. Honestly, flip-flopper should be a compliment. It's a pleb's way of saying he did research. I mean, it's fair. You know, Warren Buffett flip-flopped on the airlines. Oh, it's at 20.3. Okay, it's actually kind of stable, the yield curve. I don't like GGPI. Sorry, Ross. Way more interested. I'd rather put twice as much money in Tesla. Probably not at these prices, though. I want a firm. I want more firm. Like, give me another sale on a firm. MQ to diversify and be a buy now pay later? I don't know, because that's more of the card service that they provide, and I don't know as much that they do. You never burned anyone. You teach thousands on the market and appreciate. Oh, thank you for that. Maybe Lucid and NVIDIA partnering would be great. Would be absolutely great. Do you think Disney is worth looking into? I love Disney. I did a lot of research on Disney yesterday. I do not like the amount of debt they have, but quite frankly, most of their debt is very low interest, and it comes from their acquisition of 21st Century Fox. I meant to put this chart up. I never did yet. These are some of the most popular social retail trades today. Nike, NVIDIA, GameStop, Boeing, Alibaba, Tesla, NEO, QQQ, and AMC and Amazon. Those are your most popular retail trades today. And I'll show you least popular as well. These are just the ones I track. So least popular, oil, Overstock, Target. Target's at the bottom. I actually like Target as a stock too. Oh yeah, Target continues to fall. I mean, it's recovered a little bit, but Target, I'm gonna watch. Watch that one. There's Etsy. I don't have any Etsy right now. Roku's down here. Taiwan Semiconductors down here as well. I do think the whole like China invading Taiwan thing is overblown. SoFi, not good in terms of that retail momentum, even though it's got inflows. That's interesting why they put it there. It had like $5 million of inflows. I guess it's just the momentum is the way they're sorting this based on the green and right charts. Yeah, that's what that is. Purple, JP Morgan, Build Bear, Macy's. These are sort of the uninteresting ones to retail right now. Square, do Cash App's like, I don't know why Cash App is trending. Yeah, we talked a lot about this morning in the Course Member Live. That was a fun one. Remember, if you use any of the coupon codes for joining any of the courses, you get lifetime access to the courses and, of course, the live streams. As long as I do those, I can't promise lifetime access to live streams because I don't know how long I'm gonna do them. But I've been doing them for 4 years and I have no plans to stop the Course Member ones. Those are great because that's really when we get a lot of my research theses out too and run them by y'all. Juan, welcome Juan to Stocks and Psychology of Money. NEO earnings tomorrow. Yeah. I don't think I'm not I'm not highly enthusiastic because of the supply chain crises, but what I do want to do is tell you the implied volatility, because you want to be careful. See, yesterday I had a call option on Nvidia, no, on Adobe, and I'm like, oh, it's earnings. Well, volatility is going to be highest the day before earnings or the day of earnings. So I dumped my call option within 10 minutes of the close. Thank goodness I did, because the stock's down like 10%, so it worked out. But even if the stock was up 7% up, I would have probably lost that entire 7% on the option because of volatility crush after earnings, because 7% was the implied movement. So options were already pricing that in. So let's just say holding options into earnings, usually a bad idea. Like, I might sell options. Probably not going into earnings either, because it's just, you could go either way. Look, if I like the stock, the biggest thing I would do is I would just have shares. It's not as sexy as like, you know, the YOLO calls and stuff. And I get that, you know, I totally get it. But it's much safer. You don't have to deal with theta decay. It's a lot less to pay attention to with vol crush and that. Anyway. Yeah, AMC and GameStop definitely have a lot of momentum right now. And they're also on our momentum trackers list, right? Here's your momentum, your top stocks in order of momentum today. There we go. Anyway, puts on oil. I'm tempted because it keeps going up. We should talk to that commodities expert, though. But I am watching oil like a hawk. And I really, 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 really want to see this go to, and as oil goes up, it's going to hit stocks. I really want to see this break the 78.6 and you know, somewhere between here. I might have to short. Very, very, very risky. Good way to lose money is to short stuff. I usually hate shorting. I'm just such a big fan of Train America, you know, and really do think I would consider myself very much a long-term investor. I know some people think that's insane. Like, why would you sell then and rebuy? Well, I made a trade within my long-term. You know, I could do that. Nobody says you can't do that, but it's not like I'm trading my portfolio every single day. People gotta chill out. Yeah, SPY's down 1% now, so you've got some pain in the market right now. Short Tattooed Chef instead of USO. You know, how much worse can Tattooed Chef get? Let me tell you how much worse it can get. It's at $12.21 right now. So your downside is $12.21. I'm kidding. Oh, really? NVIDIA announced yesterday that Lucid is one of the customers? Oh, that's good. That's good. That's actually, that's good. That's good big news. We got to get that incorporated. And then let me tell you, if I see NVIDIA software start showing up on the Lucid and the software sucks, I will dump my NVIDIA shares. So I will look forward to that. I will look forward to that substantially. Yeah. And I like I said, I'm mostly allocated to stocks, but I will say, I know we're going to have a very volatile environment here going forward. If we continue to see pain, you know, over the next few weeks or whatever, and we certainly will over the next few months, we're going to have these 1% up, 1% down days pretty regularly. They create little buying opportunities, quite frankly. I mean, I think there'll be more buying opportunities to get Cardano cheaper. I think there'll be more buying opportunities to get Affirm cheaper, Tesla cheaper. So I don't think you need to get impatient. If you want to be allocated, you can be, but you know, at these levels, you should probably expect downside before you expect upside. So Kevin seems less salty and more balanced today. What are you trying to say? Yeah, you're right. Stablecoins do deserve some allocation right now. I'm less worried about stablecoins now than I have been in the past. I'd be more considering the idea of staking, but I hate the idea of the lockups. No, you know, I'm not so worried about the Fed and the rate hikes. It would have to be rug pull level. That's what we would need. Rug pull level. That's a great plan on real estate right there. Okay, I got to go. Thanks so much for joining this sort of midday one. We'll see you later. Goodbye.